Welcome to Bull and Bear Education. We have a very simple goal here, and that goal is to assist the beginning and intermediate level stock market trader to help them become a better trader and to help them become a better trader through education of the basics of the stock market. So today, September 21st, 2022 is a very energetic and volatile day coming off that hot, off the precious, brand new spanking Fed rate rise. Yay. So because of that, we had a lot of volatility. But before we get into my analysis of what happened, come on guys, help your buddy out, help your boy out. 49. You can't leave me at 49. You can't leave me there. All right, so let's get into our technical analysis of today. So ticker symbol over here, SPY. The chart is the daily chart. And why do we use 1 day? Well, very simple reason why we use 1 day. Because we do not like falling for the okie doke. All right, what is the okie doke? The okie doke is all this nonsense that happened today. Look at this. Look at this. This was open. This was the market open. Whee! Whee! So because of that, we like trading the 1 day chart. And so we'll go back to that because, again, 1 day chart, much better than the 5-minute chart and all of these other intraday charts. So we'll go back to the daily. Now, looking at this, and like I told you guys previously, I do all of my technical analysis for my videos live. I do not predetermine what I am going to say, how I'm going to say it, whatever, because I feel that that is tainting the actual analysis. If I take a look at it first and then come back and say, all right, now this is what I'm going to say, so now let me just go say it. No. I give you my live reaction. I do not go into any of these analysis with an overall opinion of the chart. However, I was not dead today, so I saw the price action and it's very bearish. Overall, the price movement for the day in net total was not much, minus 1.74%. We've had days worse than that. All right, so that overall is not a big deal. But how it happened, wow, that was just quite volatile today. So overall, what we're going to do is we're going to look at first these Fibonacci levels here. All right, and why? Because we're already underneath every EMA. So we're beneath the 5 and everything else above that. All right, so that's bearish territory. Next, we'll look at our Fibonacci retracement. This retracement starts here at 364 and it spikes up to here around what is this, 430, 431, around 430. Then after, let me get that exact number for you, 429.32. Then after 429.32 you start to hit these retracements. All right, so, and as you can see, for each of these retracement levels there was significant movement because the algorithms love Fibonacci retracements. If you do not know what Fibonacci retracements are, if you do not know how to use Fibonacci retracements, if you are wondering how does this impact my trading, what time frame should I use them on, how can I use them, how can I implement them, are they beneficial, sign up for a session with me for tutoring. How do you sign up with a session for me in tutoring? You message me on Stocktwits. My Stocktwits profile link is in the description of this video. You message me there and I will set up the rest of the details there. I will never contact you on YouTube to request tutoring or funding or funds or payment or anything like that for tutoring. Not happening. Never going to contact you on YouTube. If you wish to set up tutoring with me, I am doing a promotional rate to celebrate the start of my YouTube channel. It is going to be $20 for 1 hour of one-on-one tutoring, or $15 per hour for a group tutoring session. That is $15 per hour per participant. So if there were 3 participants, it would be a total of $45 for that hour of instruction. But if there's just one person, it is only $20 per hour of instruction, and you can pick the topic that you wish to learn about in regards to the stock market. All right, so back to SHIB. Each of these Fibonacci retracement levels were very significant. If you look, you hit the 23 and you did a little bounce, then you went down to the 38 and you closed there, and then you gapped down and you didn't come back up. Then you hit the 50% and you closed there, and then the next day you opened above it, and then you powered down and closed underneath it. Then you hit the 68, you touched it, you came back up, you came back, you gapped up the next day above the 50, came back down, and you basically played with these Fibonacci levels, and now you are here at the 78.6. I would like to also take note that you gapped beneath the golden retracement level of 61.8. There is a reason why my 61.8 is yellow, because it is the golden level. This is the ideal level that you like to see the price retrace to before returning back up. But because our price did not return above this golden retracement level on this Fibonacci retracement pattern here, this is straight bearish. We have solid rejections at this golden retracement level, not once, but twice. Boom, boom, double rejection. So because we rejected right at that 389 level, and I should have used my trading view chart today, but I used my Webull chart and I was off a little bit, because guess what? The price went up to 389 and then fell down for a perfect short. I was waiting for 391. Anyway, because you rejected off this level, you've come down, you've closed, you didn't just stop at this fib level, you closed beneath it. In my opinion, this is straight bearish. You won't be able to really find an oscillator that's going to say bullish. And the only reason why you can look at the TTM squeeze, if you look at it carefully, you were thinking it was going bullish, and then today it flipped back to bearish. MACD, bearish. All right, and the only reason that the DMI doesn't have a momentum indicator all the way up into the 30s, it is currently listed at 21. And the only reason why is because you had these green days kind of throw some momentum off for the overall trend. So what is the overall trend for ticker symbol SPY? Well, that's very simple, ladies and gentlemen. We just need to simply add our trend lines. So we'll put one trend line about right here. Yes, sir. And then we'll put another trend line right on top of it. And yes, I know they have channeling tools, but I like to use the trend lines. And for the most part, we do have a day that goes above this trend line, but we will ignore that because it came back down right immediately. Yes, sir. So this is our overall channel here. And I'll drop that southern accent. This is that overall channel that we have. All right, so a channel down, and some people might say, well, you know, if you get a channel down, Gumu, you know, channel downs aren't always the worst thing in the world, because, you know, channel downs can mean perhaps you're getting bullish movement, or maybe it's not a channel down, Gumu. Perhaps it might be, you know, the mythical, mystical, mysterious rising wedge, and a falling wedge, excuse me. And everybody knows the falling wedge is a very bullish, you know, chart feature and pattern when you see the falling wedge. Let me tell you something right now. All right, this is fundamentally driven, but it also has huge technicals with it. Yes, you could say it is a falling wedge. All right, and the reason why you could say falling wedge is because you have the price action coming in from the top. All right, but you could say it's a channel down, and if it's a channel down, both of those have bullish things. But here's the thing with that. if we go out even further on this daily chart, you could say this was a rising wedge. In the overall trend, you would say, look at this. It was going up, rising wedge, fall. Going up, rising wedge, fall. So until we start to rise again, we know that we're going to continue to fall. All right. And given that we just have fundamental news that dropped us, I would bet that we will see 364 before we again turn around to see, let's say, 390. So that would be my overall analysis on ticker symbol SPY. Not that we are in a rising wedge, but that we are, a falling wedge or a falling channel, but that we are in the result of the previous rising wedge or the previous ascending channel. And that is why we have the price action now that we are seeing, plus fundamental factors from the Federal Reserve. All right, we will do one bonus ticker as well for this particular video, and we will pick the Shiba Inu cryptocurrency, whatnot. So let's use the overall Shiba from TradingView. This should take into account all of the total volume of it. Let's look at this chart. What you see here is pretty much bearish as well. It's not as bearish as SB was looking on that particular chart, but this is pretty bearish now. This is your overall volume. You're seeing your volume decreasing. Let's look at it from a different perspective and look at it from the actual price of the ticker. We will use KuCoin because KuCoin is actually the broker of my choice. And when you get rid of the volume, you see that it's the same thing. This is just with the actual price here. It's the same chart. However, it's overall bearish. It's beneath all of the estimated, the exponential moving averages. Right about here is going to be your level of support. So I will put a horizontal line there for you to see, and then we will identify that price, which is going to have a lot of zeros and decimal points and yada yada yada. But about that number right there, you can look at it. Not too many zeros. You can pause the video if you need to, but that number right there in the yellow on the right side of the screen, that is your support. You break that, it is full on bearish. How do I know that's your support? You touched it there, you bounced off of it. You touched it here, you bounced off of it. You touched it all throughout here, you bounced off of it. And you had an uptrend when you had a candle that powered through it, okay, and closed above it. You opened well beneath it, you powered up through it, and then that powered you to do your uptrend. So this is your line in the sand. Anything above this, I would not look at it from the short perspective. Break beneath it, have fun. As for the bullish perspective, because I do like to get bullish if I can see there is a valid reason for it, wait for your MACD to cross. You're far from that. TTM to become positive again. DMI to become positive again. Get above the 50 EMA. You did pretty well last time you got above the 50 EMA. You went up, and that's the result. Get above the 50 EMA. Last time, if you look back here, you tested the 50 EMA, you rejected off of it, and you came back to this support level. You rejected off of it again, came back to this support level, and finally broke through and held above it until you had your big day. So the 50 EMA is the most relevant for Shiba on the daily chart, and this support level is most relevant for Shiba on the daily chart. All right, ladies and gentlemen, thank you for viewing my video on the technical analysis of ticker symbol SPY and the technical analysis of Shiba in you are Inu. If you enjoyed the video, please subscribe, please like the video, please follow me on Stocktwits, link in the description. If you are interested in learning how I do my technical analysis, feel free to contact me on Stocktwits. The link for my Stocktwits is in the description. You can follow me there, you can send me a message, and we can set up a virtual meeting through Google Meets for your instructional session. Alright, until next time, ladies and gentlemen, good luck and great trading.